Hey guys, how's everything? Good morning, guys. At least good morning for me. Was I was
Hi,
already
bro.
awake.
Good morning.
Hey bro. How's everything?
Yeah, it's good. Good. Everything good. And just waiting for the call. So now here we are.
I wanted to start it earlier. I already woke up actually, but I was really tired and I just went back to sleep. So it is what it is. But I'm here right now. But then I'm still going to do the call in the night again. So also today again double community calls. So all right. Leonardo, actually it was pretty interesting your backtesting on US dollar Canadian. It's pretty insane how consistent week happened last week. I haven't even really looked at it in real time. So, but in hindsight, it's really interesting to see what happened there. So a lot of setups happened.
Yes, there was like five setups, and all five got TP. So I think it was a fantastic week, and you can go and do some backtest now just to show the people how to take that entry.
Yeah, and another thing that's kind of interesting actually, that if you actually check US dollar Canadian yen, I think on the weekly, or probably the daily, you'll also see kind of the market maker model. See that? So this was the original consolidation, the low risk buy. Obviously on the 4 hour you can see it much better. See, so you have the consolidation, the market goes up, impulsive, makes a pullback. This is the low risk buy, not the impulsive. So, as I said, it's the low risk buy is technically offering you the optimal trade entry. So we can also take these off right there. See, so from this low to that high, it will be the optimal trade entry. So that's technically the ID and the concept behind the low risk buy. And again, now the consolidation. Now this was the reaccumulation phase, and here we had the smart money reversal. Same thing as I said. So basically, it can be two type of things. The smart money reversal, it can either be this one, so it would be this one, which is seen there. See, so same thing, but it can also be the breaker, which would be looking like that. So these are the two patterns for the smart money reversal, and you can see that this pattern was actually arriving to a order block, right? So it's an interesting level. So that's what's pretty interesting with the reversal, to be honest. So that's what you have to look at. And this was the order block right there. If you have the fair value gap next to the order block, so if we have the fair value gap and also the order block, you will know that it's pretty high probability. So I think it was a pretty nice setup. Also on the higher time frame, because the higher time frame direction was matching with the lower time frame daily cycles. And also if you check, we had this higher time frame market maker model. And when you have the market maker model, let's say the price is in this stage. So after this smart money reversal, you have an impulsive, and then you want to expect on the lower time frame a possible low risk sell. So what I mean by that, after you have the ID and after you have the narrative and bias of the market completing this model, and after all, trading below the original constellation, where actually we even have triple bottoms, right? So we have like the double bottom, triple bottom. We also got the liquidity here. It's pretty clear. And like the constellation. So the idea is to trade below this level. So this would be your idea for the market to start trading below and consolidating below it. So that would be the completed model. So when the market would be at this stage, you could anticipate on the lower time frame for the market to offer you technically these easy low risk sell opportunities with optimal trade entry, and let's say you can use a daily cycle, a bunch of things. So that's what happened here on the lower time frame. And if you check and if you go to the lower time frame, you can see that pretty much all the daily cycles was bearish. So I can zoom in here and look at every single day, and you will see that all the daily cycles was bearish. So this is also something I mentioned previously. Like, let's say you would have a bearish higher time frame, then you would obviously see most of the time bearish daily cycles. But if the daily cycle would offer you like a counter trend trade, like a buy, you could still be able to take that. But obviously the higher probability, and it's most likely for you to see bearish daily cycles around this area. So that's also something to keep in mind. And you can go to the lower time frame. I think also like on the 4 hour, we also had this order block candle. We also have this candle right there. So you can also use like this for like point of interest, stuff like that. So also another confluence you can add to your trading. Like not just trading randomly. You can target this level, the lows, or you can also like select these candles, to be honest. So you can go ahead, select this candle, select this one. So you can do a bunch of stuff. So on the 30-minute, let's just delete everything, and I think we can look at all these step by step, to be honest. Oh, sorry, wrong tool. Okay. Just quickly also the kill zones, just a moment. Try to be quick with it. once I got the first one, I just need to copy and paste, so it will be much faster. Okay, now I just have to copy and paste, so it will be much faster. Okay, I'm writing Wednesday 3 times. What the hell? This is what happens when you go to the charts when you just wake up. Okay, and also do the Asia range pretty quickly. So that will also be just a second. So we have midnight, 7 o'clock every single time. Here to midnight and 7 o'clock. And here to midnight. And you just need to drag it back to 7 o'clock. Some people use 6, some people use 8, but we're gonna use 7 o'clock because the real one is 7 o'clock. Also, the kill zone, we do not use the free YouTube version of ICT. We use the actual mentorship version. So there was 1 o'clock to 5 o'clock instead of 2 o'clock to 5 o'clock. But some minor differences, but you will notice it. Always use the closing prices. Do not forget that. Just make sure to drag it always to the closing price, because when you use the standard deviation, that's how you can get an accurate measurement. Like that. You can even, so it's kind of interesting. So one of the things that you would be able to use for the daily cycle, like you do not need to only follow the pattern itself on the current day. Like you can also use confluences and things from the past. Like let's say you would have just a quick example, something like let's imagine the reversal. You have like the consolidation, you have the impulsive, and you basically have this one. Like many times, you know, just even if you do not have anything on the left side, many times this thing will work just by dragging the fib like that. And you know, you can take the trade here from the bottom and technically just target always this high, the Asia range high. So you do not always have to take it like that. You can also use like conferences from the past, like you can also use like a breaker block from the past, which the market just arrives to. So you know, instead of just using like the standard deviations and you know, aligning the standard deviation with something, you can also use like order blocks, breakers. Let's say you can also use fair value gap if the market is aligning with, you know, a fair value gap, then it's also something you can use. But you know, eventually you will see that, you know, it's of course also aligning with the standard deviation. So that will be something that will happen. Most likely it will align with the standard deviation, but you know, if it's yes, correct. So you know, you just have to look at the things, and you know, if you see like additional conferences like OB, fair value gap, point of interest, that will obviously happen. But what I mean by that, it can also happen like the OB was like maybe 2 weeks ago or a week ago, couple of days ago, it can still work. So you know, you can use also like conferences in the past, and you know, you will see, I think, couple of examples here. Like we had, you know, like bunch of things. Like first of all, you know, I think which is quite interesting, which was, you know what, even if you look at actually, what's this? 7. We had technically this order block. Then we had this breaker, and you know, if you actually look at the Monday, you can see that here we have this breaker. And what happened here, that the market traded up to the breaker, see? And also when it trades into it, I think here on the lower time frame, we will see something at 8 o'clock, 8:30. So we can check it out. And, you know, the market also trades to the 1 standard deviation. And, you know, you will see that that's aligning with it. And, you know, if anybody remembers like the patterns, I can even pull up the PDF just a moment, and we can see that this is actually one of the patterns I even include in the PDF. When you would be looking at a past confluence or a past breaker or the block, something like that, and that would be aligning with a standard deviation, and that's what you could be taking in New York. And you know, obviously you have a bearish order flow. Let's say, I don't know, probably I just missed. But you know, I will pull up the PDF in a moment, and you guys can see that actually it's also one of the patterns. Just a second. So kind of similar, but you know, it's like different setup. So you kind of have to imagine the same thing, that you know, like this is what I said, that in the end it will be mostly like pattern recognition. Like it's the same thing repeating, just with different stuff, and it will look slightly different, but you know, technically it's the same thing. So this is what you have here. We have the Asia range. You know, the Asia range, it can even be swept right there, and I think it's pretty similar to what happened on the real chart. And then, you know, obviously in New York, the market trades up here, and you know, you can even see a possible lower time frame confirmation there. So this part, and that would be aligning with one or maybe like 2 standard deviation, and this part would be like a breaker block, order block or something. And technically it's the exact same thing that happened. So if you check it, it's the same thing. We have like the range swap there, then you use the one standard deviation, you can see that it's basically aligning with the breaker. And why is this the breaker? Because if you look at it, we have the market sweeping the high and having two down close candles right there. So we have the down close candles there, the market breaks it, and that technically becomes the breaker. So it's the same thing, it breaks it and it comes back there, which is aligning with the one standard deviation. So this is sort of how you have to understand this one that was previously shared in the PDF. So technically you see the same thing, but overall, if you're day trading, you will kind of notice that it doesn't matter which day it is, you will just notice one of these 4 patterns. In one of these 4, so you have what to look for. Like you notice one of these, like again, it's just pattern recognition again. So you notice it, and all you have to do is you just look for the entry. So you know what to look for, you know the time, and you also know where to close the trade in the end of the day. So once you follow this, I think everything will be pretty simplified. And I don't have an answer for that. Okay. So the next day, so this was that one. So you can even just take the trade like that. You can use the standard deviation like this, and it will be there. So you can do that basically. Let's say it's I don't care, like let's say 1 to 3. The next day is much better actually, because you can see that here we have the range, the market trades above the range, trades down, and here it creates like bunch of stuff. We have the fair value gap there, and technically this was the continuation. You can even check like almost 1 standard deviation, to be honest. But if you just have the ID, so you have the higher time frame narrative and the higher time frame bias of having the market maker model right there. You have the ID of the market trading to lower prices, then you can also easily consider this one again, the continuation daily cycle. So technically it's really easy. The market just trades up, trades down. It also creates the liquidity here, right there. So you can pull your fib like that. And this part, you just use like 18 pip stop loss. And the goal here is to end of the day before midnight. You must close it. So before the next Asia range is starting, you must close the trade. And if you do that, it will be a 1 to 2. This one is pretty interesting because here it's a very simplified version of the reversal technically. So which one is that? Yeah, so it's this one. We have the one when the Asia range is not swept. We have here the liquidity, the market trades down, it offers you something like that, and it also trades to 1 or maybe 2 standard deviation, and it can also be aligning with point of interest. But the main idea is when the range is not swept, you technically have liquidity there. So it's acting like a magnet. So this part is acting sort of like a magnet, and also it's pretty clean, equal lows with this one. So this low is equal lows with this low. So you can also consider that as liquidity. So it's right there. The equal lows, you can also consider that, and you're gonna use the standard deviation like that. So it's 1 standard deviation aligning with what? Aligning with this order block right there. You can also use this confirmation. See, it's again aligning from this high to this low, aligning with the standard deviation, and the market trades here. If it's already not enough for you that the market is here at 8:30, and optimal trade entry order block 1 standard deviation, if that's not enough for you, I think probably on the lower time frame you can check out what's happening, maybe see something, I don't know. Probably it was on the 1 minute, but I'm not really using the 1 minute either. So it can become a little bit confusing, but I think probably if you really follow like the structure, you could probably get like a trade here. I don't know, probably this one, like 8:30. It's basically creating the high, to be honest, 8:30. So you might be taking the trade like that. I don't know, but let's just not be too hindsight of this and be realistic. Which I would do is just take the trade right here at 8:30 because it's the optimal trade entry, also the 1 standard deviation, and you can just place the trade to the high there, so that you can place the trade to this high, the stop loss, and your target. You can first measure this one, and also measure this one. So it was already like a 1 to 3, so you obviously would not run it here. See, so it will just come back and later drop on the next day. But if you are only targeting 1 to 3, again you got your 1 to 3 there. The next day is again the continuation. Here the market trades, takes out the liquidity of the range. It also trades actually in this optimal trade entry. It also trades like to the fair value gap if you check it out. So we had this fair value gap in the market right there. And if you check at the 8 o'clock, 8:30 time, you will see that you can use this high, the high of the day, and you can use the low of the day, which is basically the textbook example you want to look for. So the high of the day, the low of the day, and at 8 o'clock, 8:30, see that? So 8 o'clock, 8:30, the market makes the pullback. So that's the trade you would take realistically. Stop loss obviously here. And you want to target 1 to 3 at least. Or at most I would say 3. You do not really want to get more than 1 to 3. Why you do not want to get more than 1 to 3? You gotta see that for yourself, to be honest. So you will figure that out for yourself if it's not already clear that with the 1 to 3 you will pretty soon become really successful it will really simplify everything for you. And a 1 to 3, I think, especially if you have a funded account or any account, to be honest, you shouldn't complain about it. So it's already every single day a winning trade. You cannot deny this, to be honest. This one was kind of interesting. We could take it like a no trade or maybe as a loss. But if I'm really thinking about hindsight stuff, then the market sweeps it, and we can see like optimal trade entry from this high, this low, and this is the entry. But let's just say this is a no trade. So let's just be more realistic with it. But if you really want it, you probably cash this in real time. But I think for the back testing, it's enough to see that this was happening last week on US dollar Canadian yen. And the reason why it would be pretty self-explanatory and really it would be really a simple idea to take a short every single day, because if you remember what's happening on the higher time frame, you're gonna remember that here on the higher time frame we have the market maker model. So again, if you check it out, original consolidation, this was the low risk buy, reaccumulation, smart man reversal, then you expect the market to offer the low risk buy, and eventually, just a matter of time, if you want to see the market trade below the original consolidation. So this is the model, the same model we are talking about. And also here we have the liquidity, which is again super clear. So we have the equal lows, triple bottom, whatever you want to call it. You technically have what you want to look for. You have the liquidity and this clean wicks right here. So you can target these. And it's not important to take a trade here and try to let it run here, because it just won't happen. So it's unrealistic to look at this as like higher time frame, take profit, stuff like this. So I think that's pretty unrealistic, especially holding a 1 to 10, and you might hold partials, but the reason why it's unrealistic to hold all the way here, because you would already pull your stop loss to break even, and what would happen to you is you technically pull your stop loss to break even, you get like a 1 to 3 or 1 to 2, I don't know what happens there. So 1 to 3, you pull your stop loss to break even, and then the next day the market takes your stop loss out. So that's why it's much better if you're trading the daily cycle. So now I'm talking specifically about the cycles itself, because this is like a day trading concept. Like 1 day, 1 trade. If the trade is not going anywhere and it's already midnight or it's already 7 o'clock, you will close the trade, even if it's 0.5%, 1%, or it's in a loss, you're gonna close the trade before the next Asia range is starting. So that's how you have to look at this. But essentially it's a day trading model. But even though we have higher time frame targets and directions, you still wanna use only the day trade. You do not wanna swing the trade, or you do not wanna do anything else. So it's only day trading specifically. So yeah, let's hope that was a good explanation. Also we had this order block, fair gap, so bunch of things that would confirm the direction for you. Okay, if you guys have any questions, just let me know, or just say something.
No question, bro. It's all clear, and let's hope this will be a good week, and let's fuck this market together. I don't know what to say.
Daniel,
Yeah, sure.
is
How's
this
it?
called? Yeah, good. I just came from school. Is this called already recorded, right? So I can rewatch it.
Yes, it's recorded. It's recorded, but
Yeah, did you all talk about the higher time frame bias from what I can see?
yes, I just explained that in the beginning, the higher time frame. So you might want to take a look at it, but it was like how to follow the higher time frame and look at the same direction on the daily cycles. So like here we on the higher time frame we had the bearish market maker sell model, and if you check, so on the daily we had the market maker sell model, and every single day was a sell. So this is how the higher time frame will affect the lower time frame daily cycles. So so the goal is for the market to trade below the original consultation. So that's what you have to look for. But it might be good to look at those few minutes. You might find value in it. All right, guys, I will end the call because I need to eat something. Because I actually was up pretty early already. That's why you guys already see my Discord messages. Like I replied to a few people in the Discord, but then I just went back to sleep. So it's probably because of the weekend, but who cares? I will be here for the next community call in the night, so there we can talk about more like we can discuss more things or discuss similar things again. But on Friday will be more interesting because on Friday I want to explain the SMT. So I think it will be pretty interesting because it can become a really good confirmation. But you guys will see. So it's a really good tool. So I'm gonna explain that on Friday. So alright, guys, have a good trading week. And I wish you guys
You
the
too,
best.
bro. Let's see tonight.
Sure, bro.
Yeah.
Have a good trading week, guys. Goodbye.